What if I told you the biggest secret in American history isn't buried in classified documents or locked in a vault beneath Washington, but printed right on every dollar bill you own? What if that Federal Reserve note in your wallet doesn't to represent your nation's wealth, but your nation's debt? Because for over 300 years, the true war for freedom hasn't been fought with bullets or ballots. It has been fought with interest rates, debt instruments, and invisible contracts. From London to Wall Street, a small circle of bankers perfected a system so elegant, so disguised in complexity, that entire nations became dependent without even realizing it. This isn't about conspiracy, it's about control. Because when you control the money, you control the nation. And when you control the debt, you control the future. From the Bank of England, 1694, to Jekyll Island, 1910, to the digital dollar today, the same formula repeats. Privatize the money supply, socialize the risk, and make every crisis a reason to tighten the leash. You're feeling the consequences right now through inflation, vanishing savings, and an economy designed to keep you chasing what can never be owned: stability. Where are you watching from? Drop it in the comments, because this story isn't American, it's global. And if you're ready to see how a 300-year-old plan captured the world's wealth, hit that subscribe button, because tonight we pull the curtain back on the empire behind your paycheck. To understand the plan, we need to go back long before 2008, long before the dollar. The blueprint was drawn in 1694, when the Bank of England was founded. England was drowning in war debt. A group of private financiers offered a lifeline. They'd lend money to the crown in exchange for interest secured by future taxes. In return, they gained the right to print England's money. Sound familiar? That was the birth of central banking and the death of sovereign money. The system spread like wildfire. France, the Netherlands, and eventually the colonies adopted versions of it. But in America, something radical happened. The Founding Fathers knew the danger. Thomas Jefferson warned, if the American people ever allow private banks to control the issue of their currency, the banks and corporations that will grow up around them will deprive the people of all property. And he was right. After the Revolution, America experimented with two central banks, the first and second banks of the United States. Both failed amid scandal, corruption, and rebellion. By 1832, President Andrew Jackson declared victory. The bank is trying to kill me, but I will kill it. And he did. The U.S. went nearly 80 years without a central bank. It was the freest monetary era in American history, but also the most dangerous for those who profited from debt. Because while the nation built wealth through production, the global banking elite was building something else. A plan to bring America back into the fold. They just needed the right crisis. By the early 1900s, the financial system was chaotic. Dozens of banks issued competing currencies. Then came the Panic of 1907, a sudden crash that wiped out markets and public trust. Newspapers screamed for reform. But what few knew was that the panic had been engineered. J.P. Morgan, the era's most powerful financier, stepped in as savior, but behind the scenes, he and a circle of Wall Street titans used the chaos to sell the idea of a centralized reserve system. 3 years later, in 1910, that circle met in secret on Jekyll Island, Georgia. Their mission? To write the blueprint for a privately controlled central bank disguised as a public institution. Their names read like a financial hall of fame: Paul Warburg, Kuhn, Loeb and Co., Nelson Aldrich, Senator, linked to Rockefeller family, Henry Davison, J.P. Morgan and Co., Frank Vanderlip, National City Bank. What they created would later be sold to Congress as the Federal Reserve System. The name itself was the deception. Because it's not federal, it's a network of 12 private regional banks, owned by their member banks, with shareholders entitled to guaranteed dividends and no direct accountability to the American voter. Sound familiar? When the Federal Reserve Act passed in 1913, it changed everything. For the first time, the U.S. government ceded control of its money supply to a privately run cartel. From that moment forward, every dollar would be created as debt, owed back with interest to the same system that printed it. And the cycle began. World War I? Funded by the Fed. The Roaring Twenties? Fueled by Fed credit. The Great Depression? Triggered by Fed contraction. Each crisis birthed more control. Each solution tightened the net. And every time America suffered, the same institutions grew stronger, the same ones that still dominate today. J.P. Morgan, Goldman Sachs, and the Federal Reserve itself. Fast forward to the modern-day digital currencies, inflation, trillion-dollar bailouts. The mechanism hasn't changed. Only the tools have. Sound familiar? Because what began in 1694 as a lifeline has become a labyrinth, and every one of us is walking through it, paying interest just to exist inside the maze. Here's where the story takes its sharpest turn. You've heard about 1913. You've heard about Jekyll Island. But what you haven't heard is this. The Federal Reserve was never meant to be temporary policy. It was a transfer of sovereignty, hidden inside legislation. And it didn't end there. During the Bretton Woods Conference of 1944, while World War II was still raging, the same banking families who had designed the Fed exported that system to the entire planet. The IMF, the World Bank, the Bank for International Settlements, each modeled on the same principle. Lend nations money, bind them in debt, then dictate their policy through finance. America didn't just win the war, it became the center of a global debt empire. The dollar replaced gold as the world's reserve currency. But behind that dominance was the same private network using the same playbook, just at planetary scale. When President Nixon ended the gold standard in 1971, the final chain was broken. Money was no longer backed by metal, but by belief, enforced by debt, and controlled by the Fed's printing press. From that moment, the system went exponential. Every boom, every bust, every emergency, since then has been another step toward the same outcome: total monetary dependence. And if you think the story ends there, you're wrong. Because the modern heirs of that 300-year plan have already built the next phase. A world where currency is digital, programmable, and centrally monitored. The old control was economic. The new one is algorithmic. And you want to believe the name behind the transition because it's the same institution that started it all. The receipt is wilder than you think. The name behind it all? The Bank for International Settlements, the BIS. You might have never heard of it. And that's exactly how they want it. Founded in 1930, the BIS sits quietly in Basel, Switzerland. It doesn't make headlines. It doesn't run ads. Yet it holds the keys to nearly every central bank on Earth, including the Federal Reserve. Think of it as the central bank of central banks, an unelected institution that decides global interest rates, liquidity flows, and crisis responses behind closed doors. No flags, no borders, no accountability. Only control. And here's the chilling part. The BIS was created to handle Germany as World War I reparations. In other words, it was built to manage debt between nations. Debt became the new empire. After the war, the same elite banking families that shaped the Fed used the BIS to create a financial nervous system, one that could bypass governments entirely. Money could now move across borders, faster than laws could stop it. Sound familiar? By the 1970s, after Nixon killed the gold standard, that system reached full maturity. The dollar, unanchored to gold, became pure fiat backed only by trust in the institutions that managed it. But trust is the easiest currency to counterfeit. Because once money became digital, the BIS and its partner banks gained the ability to create value from nothing and loan it out as debt to the entire world. Every nation, every company, every individual became part of a single balance sheet. Their debt became the banker's asset. That's the quiet genius of the system. You think you own dollars, but every dollar is a liability on someone else's ledger. The system ensures that no matter how much is produced, the debt always grows faster. And who collects the interest? The same private entities that engineered it centuries ago. Let's look at the numbers. In 1913, the year the Federal Reserve was created, total U.S. federal debt was $2.9 billion. By 1940, after the BIS and Bretton Woods system took shape, it was $43 billion. By 1989, $108 billion. By 2008, $10 trillion. Today, over $35 trillion and climbing. That's not growth. That's capture. Because with every dollar borrowed, the system demands interest. And to pay that interest, new money must be created through more debt. It's an infinite feedback loop of dependency. Every time the economy grows, it's really just borrowing tomorrow to survive today. Now look at the real power structure. The BIS dictates banking regulations through what is called the Basel Accords. These rules decide how much money banks can lend, what risks they can take, and how much capital they must hold. That's not oversight. That's orchestration. Because when every major bank follows the same rulebook, written by the same unelected institution, you don't have competition, you have coordination. And when crises hit, as they always do, that coordination becomes control. Remember 2008? While Americans were losing homes, the BIS quietly coordinated $16 trillion in emergency liquidity between the Fed, the ECB, and other central banks. No votes, no hearings, no democratic process. A global financial coup, executed with spreadsheets instead of soldiers. And now, they're preparing the final evolution: programmable money. The BIS is spearheading the rollout of central bank digital currencies, CBDCs, digital versions of national currencies that can be tracked, controlled, and deactivated with code. Their own documents say it clearly: the future of money is not just digital, it is programmable. Programmable means conditional. Your spending, your savings, your access all dependent on compliance. Miss a payment? Your wallet freezes. Say the wrong thing online? Your access is temporarily suspended. Sound extreme? It's already being tested. In China, the digital yuan expires if not spent within a set time frame, forcing consumption and eliminating saving autonomy. The BIS calls this policy efficiency. You might call it financial slavery with a user interface. And the Federal Reserve is on board. Their FedNow system, launched in 2023, is the infrastructure precursor of a real-time payment network, paving the road for a full digital dollar. What started in 1694 as private lending to a king has evolved into algorithmic oversight of every transaction you make. The same 300-year pattern, digitized and disguised as progress. Let's break the system down to its architecture because every layer exists for a reason. 1. Creation: central banks. Money is born as debt, created by private banks, not governments. Every dollar starts life owed. 2. Distribution: commercial banks. The private sector borrows newly created money, expanding credit, fueling bubbles and dependency. 3. Insurance: governments. When bubbles pop, taxpayer bailouts absorb losses. Risk is socialized. 4. Regulation: BIS, IMF, World Bank. These global regulators rewrite the rules after each crisis, concentrating power even further. 5. Automation: CBDCs, AI-driven finance. The final layer: complete behavioral control through programmable monetary systems. Each phase reduces sovereignty, increases surveillance, and locks the population deeper into invisible servitude. And here's the terrifying truth: once money becomes code, freedom becomes a variable. The genius of this plan is its invisibility. Empires once conquered land. Now they conquer debt. You can overthrow a dictator. You can't overthrow an interest rate. Today, 60% of global trade is still settled in US dollars, but the dollar is no longer national currency. It's the BIS's instrument of order. The Federal Reserve answers not to the President or Congress, but to the Bank for International Settlements and Global Financial Consensus. That's why every solution looks the same: quantitative easing, bailouts, rate hikes, rate cuts, all to sustain the illusion that the system can be fixed when in reality, it's functioning exactly as designed. It's not a broken system, it's a perfected one. And every crisis is just maintenance. The 5 numbers they don't want you to remember: 1. $35 trillion current US federal debt, compounding by $1 trillion every 100 days. 2. $16 trillion secret liquidity swaps during the 2008 crisis. 3. 60% global trade settled in US dollars, controlled by private systems. 4. 90% central banks exploring or piloting digital currencies. 5. 0 number of democratic votes required for any of it. Those 5 numbers are the coordinates of your financial cage. And now, the final lock is being fastened. Algorithmic money that obeys code, not constitutions. Sound familiar? Because that's the endgame of a 300-year plan that began with kings, evolved through wars, and now hides inside your banking app. We're told we live in the age of convenience, instant payments, contactless freedom, but that's the sales pitch of control. Every new layer of efficiency replaces one more piece of autonomy. You don't carry cash, you carry permission. And once money becomes permission, freedom becomes performance. The same cycle that began in 1694, debt for sovereignty, has come full circle. Only now, it's global, instant, automated. But here is the truth no one wants to say: the system doesn't need to collapse. It just needs you to stop noticing that it already has. Inflation isn't an accident. It's the rent you pay to live inside their machine. The only way you escape it isn't through revolution, it's through revelation. by understanding that the economy isn't broken, it's programmed. And the next phase, I manage digital finance, means every economic decision will be tied to identity, behavior, and belief. The 300-year plan has always been about one thing: turning money into obedience. So, before the next crisis resets the rules again, ask yourself, when money moves faster than democracy, who really owns it? When every transaction is tracked, who really spends it? When history repeats in code, are we freer or just walking the same path in better suits? If this opened your eyes, share this video. Drop a comment, tell me where you're watching from. And subscribe, because the deeper we go, the clearer the pattern becomes. Watch the next video that appears on your screen. It connects every dot we just uncovered. Because this isn't just history, it's the blueprint of the future.